Hi, my name is Nick Grantham. I'm a CPA, and today's video is about the married filing separately tax status. So, this is something we see pretty frequently with married couples. They might ask us if they should file jointly or separately. And the goal of today's video is to explain the differences, the pros and cons of each, and give a little bit of background on these two statuses. So, first off, I'd like to mention if you are married as of the last day of the year, so even if you got married on the evening of December 31st of 2025. That means for your 2025 tax return, you have one of two options. You either file as married filing jointly or married filing separately. So if you're legally married, you cannot file as head of household, you cannot file as single. You have to either file as jointly with that spouse or separately. Now, most of the time, married filing jointly is going to be the better way to file. It's going to make more sense. It's going to save you more taxes. It's going to be easier. But I want to dive into the pros and cons of each and why you might choose to file as separately sometimes. So, first off, married filing jointly. This is, like I said, this is kind of the default way that you would generally file if you and your spouse are, on good terms. If you guys are obviously married, then this is how you're typically going to file. The way it works is you and your spouse would report all your income, all your deductions, all on one joint tax return, right? So there's only one filing instead of two separate ones. So that right there is a pro. The other big benefit of the married filing jointly tax status is that the tax brackets are widened, meaning you don't jump up to the next tax bracket until you get to a larger threshold. So, for example, when you file a single, you're going to jump from 10 to 12 to 22 to 24% up to 32% to 35% to 37%. You're going to jump those tax brackets twice as fast as if you're married filing jointly. So, when one spouse has significantly more income than the other spouse, then filing as married filing jointly almost always is going to save you thousands of dollars in tax because when you file separately, that spouse specifically with the larger income is going to jump those tax brackets much faster. Whereas when the spouses filed jointly, those tax brackets are now doubled. And if one spouse is a stay-at-home parent or has very small amount of income compared to the other, then that spouse with the higher income, more of that large income is being shifted into these lower tax brackets. So that right there is usually the biggest benefit to filing jointly when spouses have kind of very different levels of income. Another pro is that married filing jointly allows for all these normal deductions such as the child tax credit, the dependent care credit, education credits like the lifetime learning credit or the American Opportunity Credit, even potentially the earned income credit. So for a lot of families, this makes that married filing jointly status like worth it just for the credits because when you file as married filing separately, you actually can a lot of these credits aren't even available to you. So that's a very important thing to mention. Really, the married filing separate status generally is the IRS's least favorable status. Like this is generally the status you're going to want to stay away from. Now, there are some reasons why you might file, which we're about to dive into. But last couple things with the married filing jointly, wanted to mention too that the phase outs for things like IRA deductions, student loan interests, and other credits are generally much more forgiving when filing jointly. So when you're filing separately, these phase outs and things like that end up being lower. So it makes it to where, like I said before, some of these credits aren't even available, or some of the deductions and items get phased out much sooner. So you might miss out on things like that. And lastly, it really is just more simple to file with your spouse because you're filing one return. It's all on one return, and it kind of makes it more straightforward. Okay, so after I've kind of been explaining the benefits of married filing jointly, what are some of the downsides or cons of married filing jointly status? I guess the main ones would be that first and foremost, when you file jointly with your spouse, you and your spouse are both liable for the taxes. So, for example, if one spouse earned all the income, the other spouse is a stay at home parent, and you guys filed jointly and you owed tax, well, the IRS could really come after either spouse because you're both liable for this tax if it's unpaid. Whereas if you file separately, you're kind of spreading out that liability and separating it between spouses. So that generally might be the main con and the main reason that spouses may choose to file separately is for liability purposes. We see it oftentimes, also that when you're filing separately, there's going to be the incentive to potentially file that way if one of the spouses has unpaid back taxes, student loans, child support payments. Maybe they're in a bad spot where they're way behind and they've got all these back payments like this. Well, wanting to separate out that liability is generally the main benefit to filing as married filing separate. So another reason that you might want to file separately would also be if you're concerned about one spouse's accuracy, like maybe your spouse is you're concerned that he or she's not being honest or it doesn't have good records, so you just want to separate from them and not file jointly to again spread out that liability. That's really generally going to be the main reason to file separately. One other thing that we sometimes would see would be if one spouse has really large medical expenses related to their income, or if you guys are in the process of getting a divorce or something like that, then obviously you may not want to file jointly in those cases. However, I would like to mention a couple things. With the married filing separate status, if you are if one spouse is itemizing, so like we said before, hey, one spouse has a lot of medical expenses compared to their income. Okay, well, great. That spouse can put that on their married filing separate return. But if they're itemizing, then they may also want to claim, their mortgage interest, their property taxes. Well, if they do so and itemize, then the other spouse also has to itemize, and they can't double dip and count the property taxes and mortgage interest that the spouse over here claimed. And they also cannot take the standard deduction on one return and the other spouse itemize. You have to sync that up. So that's again another con of married filing separate. When you file as jointly and itemize, that's great. You can itemize your deductions if you get above that joint standard deduction. But if one spouse is trying to itemize, then the other has to also itemize, even if it's less than their standard deduction. So very important to mention. Another thing I wanted to mention here is when you file separately, if you live in a state that's a common law state, so community property state, such as Texas, for example, and there are a handful of these states, then you actually still have to connect with that spouse. So maybe you're going through a divorce. You still have to link up and make sure that your two married filing separate tax returns agree, because when you're in a common law state, a community property state, a lot of the income, such as wages, different types of compensation, are community property income. So even though you're filing separately, the spouses actually have to split that income and report half on each married filing separately tax return. So it's a little bit of a headache, and a lot of times, especially if you don't have all these different sources of income and it's just wages or something like this, then oftentimes it's kind of redundant, and filing as separately is actually just going to be a bigger headache, and it's not going to do you really any good other than, like I mentioned before, this separating of the liability piece of it. So that's, like I said, I keep mentioning this, keep going back to this, but that's going to be the main reason to file separately. For married couples, married jointly, it results in lower tax brackets generally and more benefits. It also comes with that shared responsibility, which is something many people overlook. Before assuming that married filing jointly is the best, it is smart to run numbers both ways. That's something that a CPA could help you do if you're kind of on the fence and trying to determine how to file. So definitely let us know if you're somebody that's in this position where you're trying to decide between the two filing statuses. If you found this video helpful, please give us a thumbs up, leave a comment below if you have any questions. We'd love to respond, and thanks again for watching.